So we're up around 0.3%. Can we say thank you to Ben Bernanke? Or are those numbers out of Germany today the reason that we're in positive territory?
I think those are the two main reasons, and I think there's now a bit of a disconnect between the short-term factors and the longer-term factors driving markets. If you have someone like Bernanke saying that rates could be lower for longer and there could be a further injection of liquidity, it might be great in the short term in terms of keeping the rates low in currencies that people borrow, and therefore supporting then the currencies and the assets of assets that people then invest in. But for the longer term...
So you borrow in US dollar or Japanese yen, and
Exactly.
then of course you invest in high-yielding currencies.
Exactly, and in rands, and especially in our local shares, which are very high-yielding shares compared to other emerging markets. The problem with that is for the longer term, it means that the developed market is probably still in a soft patch and might be so for longer. So a bit of a disconnect between optimism in the short term, but maybe a bit less optimism for the long term.
Absolutely. So this is the top 40 behind us. MTN at the bottom of the top 40 today and down almost 3%, sitting at 137 Rand 15. Is that a buy at these levels?
I think it is. The share did go ex-dividend today, so one needs to keep that in mind. But below 140, with a lot of headline risk in terms of the Iran exposure and people, especially US investors, that might feel they need to dump the MTN share in their portfolios, that creates the opportunity for SA investors to buy in at a very reasonable price.
ABSA also down today, down just over 1.5%. What is your sense on the overall financial stocks? It seems that some say they've already run quite nicely, so time to start softening load.
I would agree with that. I think they are fairly valued at the moment, so I'm not too concerned yet. But there are signs that the growth in non-interest income will slow down, especially as the banks become more competitive. We saw the ads over the weekend in the papers of the big banks starting to really take out a lot of ads and saying they've put the cap on their fees, bank fees, but still not that much growth in terms of interest income. So with rates still relatively low and appetite from the consumer relatively muted for lending, it means that maybe both the net interest income and the non-interest revenue could show muted growth, and that's not great for the bank. So they're not expensive, but they're not a screaming buy either.
Okay, so what about Naspers? That is down into today's session, losing around 1.1%. Also, Tencent is something that has been boosting the company quite a lot. Is this rally going to continue on Naspers?
Well, we would hope
today,
so. It is down today, but it's one of our largest holdings in our funds. And what we have seen is very good results coming out of Tencent, which contributes about 80% of the value of Naspers, if you look at the value that Tencent is trading at in Hong Kong. And Tencent is like the Facebook, Twitter, and Zynga, and even Google these days of China. And with China being quite a closed market, they've been allowed to become a dominant player in that market through their QQ platform, QQ Zone, Tencent, Weibo.
And you're not worried that things are going to open up and then Facebook would be allowed to operate in
No,
China?
I'm not,
okay.
because of the cultural differences. So we still like Tencent, and through that we still like Naspers, even at current levels.
Okay, so let's also touch on Richmond. That is in positive territory today, up almost 1%, sitting at 47 Rand 29 cents, and again, very much exposed to the Chinese market.
Yes, and we should get their full year results to December out soon. They announced some management changes today. But as far as I can see, still very strong growth from the Asian markets, as well as the rest of the world, which is also actually driven by the Asian traveler just buying their luxury goods in Europe or the US. So these trends aren't slowing down. China is moving from an infrastructure-led growth story to a consumer-driven growth story. And we all know that growth isn't equal. You'll always have the have and the have-nots. And the haves in China are having a lot more and really becoming very prosperous, and you see that in the sales of all the luxury goods.
Let's touch on the resources, because we had BHP Bulletin saying that iron ore demand is starting to flatten. We've also had Australia coming out with that 30% tax on profits for iron ore and coal. Are you concerned about the overall resource space? I mean, resource stocks are still looking quite attractive. Anglo-American sitting at 297. We've got African Rainbow Minerals was in positive territory today, up around 2.7%, and BHP still sitting at around 231 Rand.
Well, I see a lot more value elsewhere outside of the commodity space. I do think that if you do have the slowdown that a lot of people are talking about, driven by a slowdown in the China property market, there could be further downside for commodities. Remember, it's very tricky to forecast commodities because of the sensitivity to the underlying commodity itself. So the company's profitability is very volatile. But if I needed to hazard a guess, I would rather buy other shares and stay clear of commodity stocks which are exposed to the China property story, which could be in a bubble.
So hold on, you don't own diversified miners BHP and Anglo-American?
A lot less than other asset managers do.
All right, that's interesting because they're sitting at record low PEs, historically low PEs. So
The
that's
problem
quite an
is the
interesting point.
E in the PE ratio, and those
The
E's
earnings.
can
Okay,
still
but
go
earnings
down.
haven't been doing so badly though on the Anglo-American BHP Billiton front.
No, sure. Historically, they haven't. The problem is looking forward at all the extra supply of commodities coming on stream and the cost curves and where they are positioned. The risk for me is still heightened in that space.
I was speaking to the CEO of Basil Reed last week, Marius Haynes, and he was saying that should all the promises come through from government that there's just not enough capacity to deal with all the demand, Marion Roberts in the doldrums at this point in time. And we know that a lot of investors are not really exposed to Marion Roberts anymore because of a lot of the risk that has come to the fore. Do you think it's time to get into the construction industry and just get exposure to all construction companies, or are you nitpicking?
We are stock pickers, so we do nitpick, as you correctly put it.
And it's down 2.3% today, by the way, Marion Roberts.
Yes, and we did see the announcement today that around about 50 million shares, just under that number, will be taken up in the rights issue by 4 big asset managers. So at least there seems to be at least reasonable support for the rights issue at 18 Rand a share for the just over 100 million shares that they are issuing. So that's good for Marion Roberts. But still, for the construction space, at the moment, looking forward to this wonderful pipeline of growth, as you said, government has promised, I would rather wait and see. And specifically in the case of Marion Roberts, with 2.2 billion Rand of uncertified revenue, with a local balance sheet that is still under strain, which is where the proceeds of the rights issue will be applied against, we prefer the likes of WBHO, which don't have these huge projects, which might look great if you take a photo and put it in the annual report, but actually don't make you a lot of money. So if we did nitpick, we would go long WBHO and not have Marion Roberts.
All right, so what about having exposure to the Bucky builder, Cashbuild?
Yes.
And we had some good numbers out of Cashbuild.
Very good numbers. And if I can contrast that to Iliad as well, if you look at the two companies, Cashbuild, a cash retailer selling general merchandise in the non-urban areas, versus Iliad, which has got a greater urban exposure. They also sell on credit to a great extent, and they've got specialist lines as well, the likes of ceramics, ironmongery, etc. So you've seen a big difference in terms of the results that Cashbuild has released, and Iliad will release tomorrow or the day thereafter. But they did release a trading statement showing that there's been a better second half in 2011, but overall still not a great performance. And that is because of those three factors: what they sell, where they sell, and how they sell that.